Hello, everyone. My guest today is Mike Oddo. He is building a company called Market Maker Leads. He started selling real estate when he was 17, became number one in his market by 26, and has had multiple offices and mortgage companies. Got kicked in the teeth during the recession, going from number one to number 47, and needed a better mousetrap to compete. He built software, used it to get back to number one, took that beta software to market, hit $20,000 in recurring revenue in the first month, sold that business, and now has been in software for agents ever since, Inc. 5000 for the past 2 years. Mike, you ready to take us to the top?
Yeah, let's rock. I'm
All
excited.
right. So Market Maker Leads, just to be clear, you still have this company or you sold it?
I do. I sold my real estate company. What that said there.
Very good. Okay, so Market Maker Leads, you founded when you got kicked in the teeth to help you get back to the number one spot after the recession. So what year was that when you launched?
That was about, 2012 is when I officially launched. So it was a little bit after the recession.
Okay, and help us understand what the product's doing. What are you selling to real estate agents now?
So it's a lead generation platform and CRM tied to content marketing for real estate agents.
Okay, and what are they paying on average for this sort of thing?
Our average customer pays $1,031 per month.
You did your research, man. You're looking at
64 cents. Yeah.
All right, about $1,000 a month. And why would someone pay, $1,000 versus $2,000 per month? In other words, what are your packages kind of look like?
Yeah, so our initial package started out at $14.97 a month. We created a $9.97 package, and what we found is that the average agent actually doesn't make a great deal of money. So we've been backfilling with lower packages, this year actually.
Mm-hmm. Okay, and how many customers have you scaled to today?
Well, I only have the core ones. I don't have the smaller packages, but we're sitting at about 200 of those core customers.
Okay, well, 200 core customers at $1,000 a pop per month. That puts you at over $200,000 a month in revenue. Is that right?
Right. Yeah.
Okay, and then just because that is pure play SaaS revenue, no professional services, no custom work.
Right.
Okay, and that's up from about how much a year ago? So what were you doing monthly about a year ago?
19% was our 2018 growth.
Okay, so 19% year over year growth there. And then do you remember what you finished out 2018 with? So about 6 months ago.
What we finished out with?
Yeah. Well,
end of the year.
Yeah.
It was just shy of 3 million. I want to say 2.8, 2.9.
In terms of your run rate?
In terms of total revenue generated.
Okay, sorry. In December of 2018, that month, do you know what you did?
I apologize. The deal's cutting out on me. Can you ask me?
Mike, it's fine. In December of 2018, so about 6 months ago, do you know what you did just in that month?
I do not know off the top of my head. I would say it's probably pretty close to where we're at right now, probably around 200.
Okay, so you're about flat. Why is that? Why aren't you growing faster?
Well, we kind of took a decided step back. We were actually selling the product on the road, and we were scaling very quickly. But the type of customer we were attracting wasn't our ideal client profile. And so we decided to put the brakes on it and look to either build products that were more suited for the people we were selling. We were selling real estate agents with $1 and a dream that couldn't really afford our product. We got really good at sales and marketing. So we wanted to stop that, put lower price products to meet them where they were at. And that's the endeavor that we're on now. And it was a churn play is why we did that.
What was churn and what have you gotten it down to?
Gosh, back then it was, as high as probably 18, 20%
monthly. Oh, wow.
Yeah. And so right now, let's see, what do we got? We got logo churn at 3%, revenue churn down to 2.93.
That's great. So that's about 36% revenue churn annually per year. Now, what enabled you to go from 18% down to 3% basically per month? Was it just changing the customer profile?
No, it was understanding the customer profile a little bit more, and I think creating the proper expectations up front. A lot of times agents, and that's what I sell to is real estate agents, they have a kind of shiny hubcap syndrome. So they'll buy anything and then it needs to work now immediately. They got to get a return on it this month because they slammed it on a credit card they couldn't afford. So getting the agent to understand how long it takes for our product to get up and running for them. It's a little bit of a sales prevention model, but it gets us a better customer. And in the end, it's more profitable and we'll build a better foundation, taking 2 steps back, right?
Mm-hmm. Okay, good. So 200 folks now, more your ideal customer. Churn is down at 36%. Do you have any expansion revenue annually or no?
Define that for
That's
me.
like if you have a hundred of these customers paying, I'm making this up, 10 grand a month a year ago, you'll lose 36% of that 10 grand. So you're down at, set 10 grand minus 3,600. Does that same cohort, the ones that stay, do you get them paying more?
We're working on that through the lower tier products to have a strong ascension model, really to grow as they grow, because that's kind of.
But not yet. You can't point
Not
any.
yet.
Okay, got it. So net revenue retention annually is about 64%, 100% minus the 36% churn.
I would say that's accurate math. Yes.
Okay, and then walk me through kind of funding. So how have you capitalized this thing? Are you bootstrapped or have you raised capital?
No, just bootstrapped. Never raised capital. Never really endeavored to or looked into it. When we hit that Inc. 5,000 list the first time, a lot of phone calls. Ignored most of them. It's probably a smart thing to do, but just really not. It's not my wheelhouse.
Yeah. Well, it's not smart if you don't know how to use. I mean, it's not smart if you don't know how to use money to grow because you're giving up dilution. I mean, you're getting diluted, right? What's the team size today? How many people?
15.
15. And where's everyone based?
Springfield, Missouri, and Dallas, Texas.
Very cool. Okay, Dallas. And I assume because you're bootstrapped that you guys are profitable, or are you funding losses with your own capital?
No, we've been profitable from day one. Very profitable.
Like how? Like you're talking 20% of the bottom line or 40%? How much?
Generally at least 40%. Yeah.
Okay, that means you're taking about 80 grand per month to the bottom line on 200 grand top line revenue.
Yeah.
That's right.
Yeah, that's accurate. Last year we invested more of that into some of the things that I mentioned. So not as profitable last year. Once we hit kind of the sweet spot of what we want to accomplish this year, we'll start cranking down more on profitability, getting it raised back up.
Okay, but what is it at today? It's like last month you had a total of a kind of 200-ish grand in total income. Total expenses were about what?
Our profit last month was about 30 grand.
Okay, still, I mean, look, by the way, still not bad. No, I love that. I love profitable bootstrap SaaS companies. It's a beautiful place to be. How are you? Walk me through the mousetrap. How are you getting new customers?
Well, content marketing is a big part of it. We put out a lot of content through Facebook Live. We recently launched a free tool, which is a free CRM, which we're putting out. And
what's it called?
The free CRM.
Oh, thefreecrm.com.
No, I'm sorry. I thought you.
Yeah. What is the free CRM? What's the website?
Marketmakercrm.com.
Okay, Market Maker CRM. And how are real estate agents finding this?
Pay-per-click on Facebook.
Interesting. Okay, marketmakercrm.com. Wait, this is interesting, Mike. Break down this for me. So what does it cost you via Facebook ad kind of PPC to get one new free user on the free CRM?
$6 and some change.
Okay. And how many free users do you have to get one new paying customer at $1,000 a month?
I don't have that exact metric, but I do know that what I look at is the amount that we spend and the return on investment in that marketing campaign is profitable month over month. So it's really not costing us any money, and then we get the recurring revenue.
So break that down for me. Last month, how much did you spend on Facebook ads or PPC?
Probably about 10 grand.
Okay, 10K. And so what? How many customers will you land from that?
Because of the smaller products, I don't have the exact number because we're still testing. But we at least made 10 grand. We probably made 11 or 12 back.
But is most of that on people paying $1,000 per month for your software, or it's other stuff, ebooks, consulting?
No, it's smaller, lower tier products. $197 a month product, a $297 a month product. What we found, we'll GCI pop them, which means that we'll get their annual income on the sign up of the CRM. 80% of them really shouldn't pay more than about $200 a month for any kind of a marketing product,
because you're taking a percentage of their disposable income.
Mm-hmm, mm-hmm. And so if they were to reinvest into software or lead generation, that's really the max they can afford. And that was a mistake we made when we were going full steam on the roadshow, because we could sell them, they just couldn't afford it.
Yeah. So if you spent $10,000, right, and it's $6 to get a new lead, you're getting about 1,500 new leads a month from that free CRM. Is that right?
Yeah, I think that's probably pretty correct on average. I want to say in my mind it's about 1,000. So maybe we spend a little less. Maybe our budget's 10,000 in the model, maybe we only got to about 8,
I see. Okay. But the point is you're using that to sell lower tier products, 97, 197, based off what the household income is for that particular agent. And then some portion of those, maybe 1 or 2 of them, you're converting to one of your new $1,000 a month customers.
Correct.
Okay. How do they go from a 197 kind of small tier purchase to $1,000 a month purchase?
Actually what we're doing in that GCI pop when they go to sign up for the CRM is we're showing them the right offer based on their income. So we haven't nailed the ascension so far yet.
Interesting. What software are you using to collect the lead where when I say I'm making this up, 180 grand per year, that allows you technically to on the next step of that form, say you should buy this thing?
Well, we're using our own. We had to custom build it, and then we're driving it based on that. And I think there's some WordPress involved to an evergreen webinar that plays one of the 3 different price point webinars automatically for us.
Oh, interesting. What webinar platform are you using?
I don't know off the top of my head.
That's okay.
I can go ask Jess real quick.
No. I'm just curious. There's a lot of them out there, so I'm just curious if you had a favorite.
Name one, and I'll
Webinar Jam, or Go-To Webinar Ninja.
I think it's Webinar Jam. Yep.
Okay, got it. Cool. All right, let me go in here. Okay, so growth looks good. You talked about team size. You're still bootstrapped. So you mentioned you got a bunch of calls from VCs and folks that want to invest. And is it really just, did none of them give you the valuation you wanted, or really you just didn't know if they gave you $1 million where you'd spend it?
I think everybody has like a certain level of intelligence in different categories, and mine is not particularly there. I did have one company that was an equity capital company that we were actively working with and looking to put a deal together. They had some adverse situation within their organization and kind of put the brakes on it, and that was the end of us looking at it.
What would, Mike, out of curiosity, so I'm really fascinated with how to get software companies like yours cheaper capital, where you don't necessarily have to get diluted. How do you, if you had to go out right now and I'm going to make this up, get $400,000, what do you think what's the cheapest cost of capital you could get where you're not, by the way, you're not selling equity, just like an interest rate? What do you think the cheapest is? No personal guarantees, warrants, or covenants, just cash advance.
Personally, the profit margin of our product. That's the way I've always looked at it.
So you would go, and who do you think you would raise that? Who would you go to raise that from, you think?
I would sell something. I would sell something and make a spread on it. If I had to make 400 grand quick, that's how my brain would think to do it.
Yeah.
The only alternative would be, maybe some private capital raise with some larger agents and customers that are fans of ours.
Uh-huh.
But
they'd want equity, right?
Yeah, they would definitely want equity for sure.
That's what I'm trying to figure out, right? Like if you saw that you could spend 20 grand a month on these Facebook ads and go from 1,000 new leads to 2,000 new leads, and you were getting your cash back immediately, so payback period's really healthy, you would go out and try and run an experiment with somebody else's money to see if you can actually scale the business that way. And I'm just trying to figure out from your perspective how you think about if you had to go get 500 grand, where you'd get it from. Now, your answer is a good one, which is customers are our best investor. Let me just go sell more. But if you were going to go try and get that money from somewhere else, I'm trying to figure out if you've done the calculation to figure out what your cheapest cost of capital is.
I haven't. Like I said, I don't have a high level of sophistication in that area. Maybe you could tell me. What are your thoughts?
Dude, Mike, I don't know, man. This is why I do the podcast. I'm always want to stay abreast of kind of what software CEOs are thinking about. So, I will tell you, there's very expensive capital out there right now in terms of venture debt, where you could go raise 3x your current monthly recurring revenue. So it'd be like 600 grand for you, right? But you'd have to pay that back, let's say over 3 years. And you'd pay back a 1.3x. So 600 times 1.3, you're looking at 900 grand you're paying back over 3 years. So the only reason you would take a deal like that is if you felt like you could use 600 grand today to make more than 900 grand over 3 years, right? That's the only reason you would take that kind of deal, which means you have to have an engine that gives that kind of return. What I'm trying to figure out is there a way to get software CEOs like yourself capital cheaper? Like if I said, hey, I'll give you 500 grand today, but it's a cash advance, no covenants, no warrants, no equity, no nothing. I'm literally loaning you the money, and the fee for you to get that today. Actually, think about it like real estate, almost like hard money, right? You'd pay, like, I'm making this up, you'd pay whatever 25 grand, right, for the right to get 500 grand today, and then I'd have to trust that you pay it back. Like I'm actively trying to think about models that allow me or my partners to get capital to folks like you cheaper without having to give up equity.
Gotcha. Well, if I was in your seat, I would say, how's my investment secure, right? And how soon can I get it back? And what happens if
That's the thing here. I have so much data. I've done 3,000 of these interviews. I can actually pretty accurately price the risk of a SaaS company's ability to pay back. I could look at your cohorts of customer signups and get a pretty good idea if you could pay back that 500 grand. Assuming you could, though, the question becomes how cheaply could I get you capital? And I threw that question at you to see, just to have a real time brainstorm here.
Yeah, I love that. I would have to really assess. I'm a big fan of finance, and especially as it pertains to real estate. I look at if I can get 10 grand a day and it costs me $50 a month in carry costs, how many years does it cost me to save up $10,000? And so that's how I would look at that equation as a software entrepreneur. How long would it take me to scale that to be able to use it today? How much could I get back right now from having that capital in my pocket? And then quantify that, over the amount of the time of the debt versus the amount that the capital actually cost me.
That's exactly right. You're taking 30 grand a month right now to the bottom line. If I was going to write you a check today for 600 grand and you said no, your opportunity cost would be you have to wait 20 months to get 30 grand to the bottom line every month. And then you kind of do a discounted cash flow analysis on it.
Yeah. Yeah. I think you're onto something. I think that done correctly, I would definitely be in,
Yeah. Well, listen, we'll chat more offline, but it's something I'm actively thinking about. So I wanted to run that by you. So do you know today your fully weighted cost to get a new $1,000 a month customer?
Yeah. Our CIC is $426.15.
You've done your research. You must have listened to episodes before this or something. You did your research, huh?
Jake, who is our head of sales and marketing, is a big fan. And he reached out to me last night and he's like, Mike, do you have your questions ready? And I was like, no, they didn't get any questions. He's like, well, here they are. And so then I called Pat, who's our operations manager. I said, Pat, here's the questions. He's like, what? And then I said, come on, Pat, you can do this. He's like, all right. So yeah, he knocked it down for me.
I love it. Well, listen, here's the question. Are you having fun?
I am having a lot of fun.
Good. No, this is great. This is great for me. I love kind of niche specific things like what you're doing versus like me talking to another marketing, a pure CRM player or something like that. So this is great. Okay, let's wrap up here, Mike, with the famous five. Number one, what's your favorite business book?
Favorite business book? How to Win Friends and Influence People. Sure.
That's a good one. Number two, is there a CEO you're following or studying right now? Russell
Brunson. Yeah.
Number three, what is your favorite online tool for building your company?
Favorite online Facebook.
Good. Ads are working for you. Number four, how many hours of sleep you get every night?
Usually I try to get 7, but I have small kids. So
how many?
2.
2. Wow. 6,
okay. 6 and 13 months. Yeah.
Woo. Okay. So married with 2 kiddos. Mm-hmm. And how old are you, Mike?
38.
Last question. What do you wish your 20-year-old self knew?
More marketing.
Guys, marketing is powerful. Market Maker Leads, selling to real estate agents, used to have really high churn at 18% per month, now down at just 3%, doing about 200 grand per month in revenue. That's up from 173 grand just 12 months ago. They are bootstrapped, so slow growth is the answer here, and it's working nicely for Mike. Launched this software to help him move his status as a real estate agent up back to the number 1 spot after the recession. So it worked for him. Now a team of 15, they're profitable, taking 30 grand a month to the bottom line, so about 15% there as they look to scale and grow and drive expansion revenue. Mike, thanks for taking us to the top.
Thank you.